As Europe transitions into spring, we have used the opportunity at UBP to similarly transition our heavily asymmetric positions in portfolios to positions now instead focused on what we expect to be increasingly two-way risk in the weeks and months ahead. Indeed, in February and March, we leaned heavily on our risk-off and asymmetric exposure, which helped cushion the broad-based sell-off seen across asset classes through much of the first quarter. These sell-offs were aggravated by the belated responses from both US and European policymakers in not only implementing containment efforts, but also in rolling out measures to offset the demand shocks that were rippling through Western economies. In anticipation of these responses coming into month end, we pivoted from our asymmetric risk asset positions and unwound some of our outright protection exposure to seek to not only tactically benefit from the emergence of stimulus, but also to reposition portfolios more strategically for the new regime that lies ahead for investors. In particular, we closed positions in put options and longer duration government bonds, which protected portfolios well during the turmoil in February and March. Similarly, we pivoted from our asymmetric long hedge fund and structured equity exposure, which generated significant alpha in the equity market sell-downs, and into directional global equities, which had begun to overly price the prospect of our credit contagion scenario. With the US and European central banks both serving as lender of last resort to their economies, as well as the buyer of last resort in credit markets, we believe the one-way risk that characterized markets in February and March will now give way to a two-way tug-of-war between policymaker stimulus efforts and the ongoing spread of the virus. Perhaps the clearest casualty of this regime shift that has taken place is in the foreign exchange arena. We expect the risk-off driven strength of the US dollar is near its end, and we have reduced our US dollar exposure, especially for Euro and Swiss franc referenced investors. Admittedly, it is too early to do the same for more cyclically oriented or emerging market currencies. Despite liquidity challenges in the bond market, we are seeking opportunities to stand next to central banks as they seek to stabilize credit markets and capitalize upon the widening spreads across the credit spectrum and positive absolute yield being offered for the first time in a long time in Euro and Swiss franc. We remain cautious on bank credit exposure, having been protected during the most recent crisis in 2008. Politically, banks may need to do their share of national service to their home economies in the current downturn. In equities, though we retain some asymmetric positioning via long-short hedge funds in China and the broader technology sector, we have instead taken a tail risk management approach via options, now willing to accept modest near-term drawdowns, but focusing our protection efforts against tail risks of policy error or a failure in containment in the weeks and months ahead. In addition, though we have augmented our physical gold exposure in March with asymmetric gold exposure via options, we continue to seek to build strategic exposure to physical gold looking ahead. For more information about how we are managing portfolios during this coronavirus turmoil, please visit us on ubp.com.